Sense is run by a bunch of investment bankers, and their modus operandi.
Today with Henri Chabadel. Henri is the specialist of flexible management at Groupama Asset Management. Thank you for being here.
You're welcome.
Henri, the last couple of years have been very difficult years for implementing a flexible approach to the markets. How have you managed this situation, considering the high volatility and the high uncertainty that markets are suffering and have suffered?
Yeah. First, we were not surprised by the level of volatility. In fact, it is embedded into our process, the convictions, very strong conviction that we are going to face 3, 4, maybe 5 years ahead of very volatile market with risk on and risk off periods. Second, the only thing we had to do was to stick to our process. We have built this process prior to the Lehman crisis. We have checked it was quite robust during this crisis and during the crisis that went after that, the Greek crisis especially. So in 2011, we were not surprised by what we had. We stuck to our process and we were quite happy to see that the process was responding just like we were expecting.
I know that one of the messages that you want to transmit is that investors are now confronted with new risk. What are those new risks?
The first risk is to be burned out by a risk-off period. So you have to be ready to endure markets down 20%, maybe 30% in a very short period of time. So that's the reason why we are trying to convince investors to look at flexible approach, because these products are a way to protect themselves against this kind of markets. The second kind of risk are all the risks embedded into the markets right now. You have endogenous risk, like the liquidity risk, like the solvency risk. These are traditional risks, but their impact on markets is higher than previously, just because there is less cash into the system, less ability of investors to resist to down markets. And there are also a lot of exogenous risk. What I call exogenous risk, these are risks that cannot be anticipated by the market, like the political risk, like the population risk. Clearly, knowing what Greek people will decide in a few weeks will radically change the investment world. All these risks have to be managed. They are source of opportunity, but they are also source of potential severe drawdown. And the only way to be protected against that is to be very reactive, very flexible.
Okay, well, let's be practical. How have you positioned your portfolios considering all those risks?
Well, we have considered that in such an environment, you have to choose your risk first. And in terms of hierarchy of risk, we prefer to be invested on credit rather than on equity, because if things go to the worst, then we will be senior as compared to the equity investors. And second, we prefer to be as far as possible from the epicenter of the crisis, which is currently located into the Eurozone. So we prefer to be invested outside of the Eurozone. Let's choose the US market, for instance, for credit markets, but also look at emerging markets, because we can consider them as stronger than some of their developed counterparts. And the third consequence is that as we want to be ready to risk-off periods, we are buying a lot of insurance assets which will deliver positive performance in case of a very bad news, a very bad market. So we are buying volatility, we are buying 10-year US, we are buying US dollar, this kind of assets. Okay,
and the last question, when would you say that it will be the moment to be more aggressive in terms of risk?
I wait for that, but clearly what I know is I don't know. Okay, it depends on a lot of factors, and a lot of these factors cannot be anticipated. Just like the capacity, the ability of population to accept the austerity, the ability of population to vote for austerity, and also the reaction of politicians in the debate in Europe between growth and austerity, Eurobonds or no Eurobonds. At this stage, I have to be nimble. I cannot anticipate on that. At some point in the future, I expect that things will get clearer, but I'm quite confident it will not come in 3 to 6 months.
Yeah, I think that nobody can anticipate.
No, nobody knows.
Okay, Henri, thank you very much for your views on flexible management. Thank you very much.
You're welcome.
Thank you.
Run by investment bankers, and their modus operandi